All right, let's dive into a real head-scratcher today. We're looking at BAE Systems and their first half earnings for 2025. You see, the headline numbers looked fantastic, absolutely solid. But the market, its reaction told a completely different story. So what exactly did investors see that spooked them so much?
So, picture this. It's July 30th, and BA's management is practically taking a victory lap. The CEO comes out with this statement, and you can just feel the confidence. Strong results, good growth, and they're upgrading our full-year guidance. It's everything you want to hear. Sales are up, profits are up, they're feeling great about the future. This should have been an absolute home run, right?
Well, yeah, not exactly. This is what happened to the stock price on the day they announced all that great news, a drop of 2.3%. So what gives? Management is celebrating, and investors are hitting the sell button. That's the puzzle we're going to piece together right now.
Okay, let's get into Section 1, the earnings paradox. And it really is a paradox. This is one of those classic cases where the market is clearly looking past the big, shiny headlines and focusing on something else entirely.
And this just lays out the conflict perfectly. On one hand, the good news is undeniable. Sales up 11%, underlying profit up 13%, and they even raised guidance. That's solid. But on the other hand, you see what investors were worried about. The big one, negative free cash flow. Then there's some chatter about order intake normalization, and of course, the stock getting hammered. To figure this out, you got to do what you always do. Follow the money.
And that brings us to our prime suspect. When you see a disconnect this big between great results and a falling stock price, there's usually one number that's the main culprit. And in this case, it was all about the cash.
Now, before we go any further, let's just do a super quick refresher on free cash flow, or FCF. This is so important. It's not about profit on paper. No, this is the actual hard cash a company has left after it pays for everything it needs to run and grow. Think of it as the lifeblood of the business. It's what you use for dividends, for stock buybacks, for everything. So you can see why, for an investor, a negative number here is a huge flashing red light.
And there it is, the smoking gun. BAE Systems had a free cash outflow of £368 million. That's cash going out the door. And to put that in perspective, in the same period just last year, they had a cash inflow of $219 million. That is a huge swing in the wrong direction, and it's the number that sent a shiver right through the market.
Okay, so the market thinks it has its culprit. But every suspect deserves a chance to tell their side of the story. So let's move to Section 3. The alibi. This is management's explanation for that really scary-looking cash flow number.
So what did management say? Well, they basically said, hey, everybody calm down. This is just a timing issue. They called it expected seasonality. The simple version is this. They'd already received big cash advances from customers in the past. In the first half of this year, they were busy paying that cash out to their suppliers to get the work done, but no new big checks came in during that same period. So more cash went out than came in. They insist it's a timing thing, not a fundamental the business is in trouble thing. And to prove it, they are sticking by their full-year guidance of over £1.1 billion in cash flow.
And here's where all that confidence comes from. A £75.4 billion order backlog. Let that sink in for a moment. That's not a wish list. That's contracted, signed, confirmed work that gives them visibility on their revenue for years, and in some cases, even decades. When you look at a number that massive, a cash flow dip in a single 6-month period starts to look, well, a lot smaller.
And this timeline really puts it all into perspective. The defense industry doesn't operate quarter to quarter, it's a game of decades. Programs like the new GCAP fighter jet and these next-generation submarines, these are monster projects that won't even hit full production until the mid-2030s and beyond. Management's argument is basically you can't judge a marathon runner by their first 100 yards. It's a long, long race.
And that naturally brings us to the bigger picture. Because to really understand BA's confidence, you have to zoom out from the company's financials and look at the massive tailwinds blowing through the entire defense sector right now.
The geopolitical world has fundamentally changed, and you can see it right in the spending. The UK is aiming for a massive 5% of its GDP on national security. Japan plans to double its defense budget by 2027, and the US budget request is approaching $1 trillion. For a company like BAE, this isn't just a trend, it's a tidal wave of demand.
And BAE is set up perfectly to ride that wave. They have key roles in the U.S. Golden Dome missile defense system, they are surging production of munitions, they're innovating in cutting-edge drone tech, and they're even investing to potentially double production of the crucial Eurofighter jet. They are strategically plugged into just about every major growth area in defense. Okay, we've seen the evidence, we've heard the alibi, and we've examined the broader context. That brings us to our final section, the next call, our verdict. As analysts, this is where we make our call on the stock. So what's our prediction for the rest of the year? We expect revenue to meet or even beat their upgraded guidance, powered by that huge backlog. We see that free cash flow number rebounding strongly in the second half as the timing issue resolves itself. And that in turn should lead to a positive trend in the stock price as the market's focus shifts from the short-term noise back to the powerful long-term fundamentals.
So that's the short-term outlook. But what about our overall equity research style rating on the stock right now?
Our rating is outperform. We believe the market's negative reaction was a short-sighted focus on a temporary cash flow issue. It completely overlooks the powerful multi-year growth story that's supported by an enormous backlog and unprecedented global demand. The long-term fundamentals here just look incredibly strong.
And as always, this is not financial advice. Please do your own research before making any investment decisions. In BAE's case, the real question for investors isn't about one-half's cash flow, but whether they have the patience for a story that's going to play out over decades. Thanks for tuning in.